Hey there, this is Bill with smarttrades.com, and today is Friday, May 25th. It's around 12:40 p.m. Pacific time. And as always, if you'd like more frequent updates, more in-depth analysis, please visit my site at smarttrades.com and subscribe to my newsletter. Um, Very interesting week or so in the markets here, and I'd like to start off with the S&P. Here indeed is the S&P cash on the chart, and interesting that we bottomed almost to the hour on the new moon eclipse this Sunday, basis the futures. That is interesting, not only because of the near exact bottoming of the market along with the exact time of the new moon, but that it also mirrored the November 25th low, which was also on a new moon in terms of price. Both of those declines are approximately the same magnitude in terms of price, and the current decline in terms of time is almost exactly 1.62 as long as that November decline. Variety of ways we can count this pattern. One of them is that we have a completed pattern up here, and that we've started down, and this perhaps is just of a larger decline down. There are, again, other ways to count it. Here's a much more bullish scenario. We do have a very tiny overlap of wave 1 and wave 4, which is an Elliott wave no-no. However, it is only on an intra bar basis. There's no closing overlap. I don't really like this count, but I think it's interesting to note again because of the obvious relationship both in terms of the lunar cycle as well as price and time between this possible 2 and this possible 4 decline. They do seem to be related in some way. Also, you'll see here we do have a significant support level that we've come into on the lows Sunday, Monday on the S&P. Here indeed is that this is an hourly futures chart going back to November 25th, 2011. The new moon was approximately 3 hours before the actual low overnight, and then we had a retest. Here's the current market. We actually bottomed around 3:40 p.m. Pacific time, and the new moon was about 4:47. So just over an hour off, I believe, of an exact hit on that new moon. And again, the interesting factor of having an eclipse along with that new moon just makes for an interesting scenario. Also, again, we've had a retest. This chart obviously is dated. This is from my report that I sent out to my clients back in earlier this week and over the weekend. And here we have the more bearish count in the S&P. Certainly this is a possibility. The rally so far has been pretty weak off of this low. I am concerned that this is an important top up here. That said, I think there's a lot of cross currents, and I'm far from certain whether or not we've peaked or not. We'll have to wait and see. Detailing that possibility, you could have a 1 down, 2 back up, 3 down, and possibly a triangle evolving here in a wave 4 position. Another scenario in the futures is that we've got an A, B, C correction. The 1340, 1343 area or so is very important in terms of resistance. And the other count possibly is that we've actually got a wave 1 down complete. Notice on the Dow we have multiple areas that were resistance here around the 12,250 area, and then a consolidation. We are testing that area at the recent lows. We actually made a new low in the Dow, not a new closing low, but an intraday. And we do have somewhat higher lows basis the NASDAQ advanced decline line, which tends to be bullish, but we're not getting the kind of bounce I'd like to see. Here indeed is that 1.62 times A pattern off of the highs, typical of a C wave relationship to A. The other thing that makes me wonder that we may have corrective decline rather than an impulsive one is the new high that was made in the Dow. It was not made in the S&P nor the NASDAQ, but that new high in the Dow was an obvious ABC pattern. Now, we could be evolving into something else, but so far we're holding at this previous swing level, and if we do continue to hold, it is a possibility we've got an ABC decline down. Here is my longer-term count, basis the S&P, and this is one of the reasons that I cautioned my clients here at the 1420, 1415 area basis the S&P is the longer term count is very definitely pointing down. One of the reasons I think that this has been a difficult market to count is that this whole rally is a B wave, and B waves are notoriously difficult in terms of Elliott wave because there's lots of different possibilities. I posted this chart before as well. This is the fractal relationship to the 2011 peak. We have a larger scale variation of that possibly in play. If that's in play, I would expect that we're going to go down perhaps to the 1150 area, perhaps even lower, mirroring this drop that occurred after the 2011 peak. You have here our small ABC and then the big brother large ABC. In this scenario, this fractal pattern, if it were to play out, we could have a retest actually of the 2011 peak, and that would come in around that 1350, 1370 area, perhaps as far out as February of 2013. Interesting to watch. At any rate, the point is both of the longer term counts, both on a more pure Elliott and also that fractal analysis, all point down into the intermediate term. That said, we'll have to watch it play out. One of the cornerstones of the ultra bearish count is that massive deflation is going to unfold. To me, I have a problem with that because, as you can see here in gold, I think you have a very clear ABC decline. You could count this also as A, B, C down. But the bottom line is, off of the highs in 2011, gold has traced out what I think, best counts far and away as a corrective decline. Also, if you look at the euro also has almost a textbook ABC down, another corrective-looking rally back up, and another corrective-looking decline. I've noted before on the dollar and the euro, perhaps this is a triangle-type pattern, but the bottom line is, deflation and some kind of dollar explosion. It's just not in the charts, at least the way I count it, either in gold nor in the dollar or the euro. I'm not showing the dollar, obviously, just the euro here. And again, clear as it can be, so far I think that this decline in the euro counts as an ABC, perhaps again in an ongoing longer-term corrective pattern. Here's a little bit of a blow-up of that chart, and it's interesting. We are reaching a very crucial area perhaps in the euro, at least on the short term, around the 125 area. We've got a possible ABC down, X, ABC. The second ABC is approximately equal to the first ABC around that 125 area, and that's about a 78% retracement of this rally here, X. Also, interesting pattern. We have another little fractal type deal going on here. We have what I count, I think, best as A, B, C down, and you'll notice the decline on the short term off of the recent peaks here has almost that exact same pattern. 0.62 times A comes in again around that 125 area, as well as ABC1 equaling ABC2 around 125. So far, though, the euro has struggled, so I'm by no means married to that count, and a drop below 125 would be a concern both for the euro and for the stock market short term. At any rate, so far, short term, the stock market has held up relatively well. Apple, obviously one of the leaders for the NASDAQ, possible A, B. You have an A equals C almost to the tick down here around the 530 level for the low. So far, it's struggling to get back through the resistance, which comes in around 575 or so. Nonetheless, that's a pretty nice impulsive rally off of that low. So a pretty good chance that we've got a low in place in Apple. Bank of America, much more of a struggle in the banks here. But that said, very nice symmetrical possible bottom here. You'll notice 1, 2, 3 on the way down, so you've got a series of lower lows and then matching almost perfectly symmetrical higher lows after the bottom. Also, the angle of ascent off of this low is almost identical to the angle of descent prior to the low. Anyway, it's important that Bank of America hold around 7 and then rally through about 740, preferably through the 766 area to confirm that indeed it has a bottom. If it fails below 7, it would call this symmetry into question. Facebook, interesting. I'm often asked about IPOs, and this is a classic example of why they're dangerous for the average investor. Facebook was offered by Morgan Stanley, and they apparently were able to get in, prior to the actual public IPO at below 38. They sold somewhere upwards of 400 million shares, above 38, and actually went short off of the IPO, and you can see the result. Interesting to watch down here. There may actually, get a low risk trade, but the bottom line is this is pretty treacherous when you've got the underwriters, trading when there's no data out there, trading blocks of hundreds of millions of shares, and doing so, basically knowing what reports they're going to come out with and release to the public, and no data even being released to the public in the first hour and a half that Facebook came out. Google, interesting little pattern here in Google. It has broken through a trend line and a support area that had been holding for some time. This will be interesting to watch in the days ahead. But this is an example of how you can use Elliott wave to trade a larger pattern and enter and hopefully risk less. Here is that low that was broken today. But prior to that, you had a nice little ABC rally that failed, came down, and yet another consolidation. Here is that smaller consolidation blown up. And this is the kind of pattern where I don't think you have to know the big count. You don't have to know exactly where you are in the Elliott wave grand super cycle type of count. You just have to realize that you've got a series of ABCs that are threatening to break through support. And in this case, the idea is to sell the B wave breakdowns, and you could have done that on this point B level, risking to the top of the pattern up around point C, and now bringing your stop down to above this secondary consolidation, perhaps around 594, and having a break-even trade or better locked in, assuming we don't have any gaps or something of that nature. Anyway, that's about it for now. Hope you're having had a great week and enjoy the long holiday weekend. Thank you so much for watching. And again, visit smarttrades.com if you'd like more frequent updates or in-depth analysis. I do post there on my newsletter pretty much every day, also updating on Twitter. There's at least one major report a week, and then oftentimes 2, 3, or even 4 intra-week reports, all at smarttrades.com. Thanks again, and have a great weekend. Bye-bye.